So from here, we can see like the horizontal rays, we only use them to outline the highs and the lows of the structure. We don't use them to maybe cater for the sensitive levels or the sensitive zones. We only use it to highlight the highs and the lows of the structure. So this is our another low here of the structure. And we also use what trend lines. So with trend lines, guys, when we use our trend lines, either we are on a bigger time frame. If we are on a bigger time frame, let's say on a daily chart, we only use trend lines to outline what our outer structures. We don't use trend lines to maybe outline the direction or the trend. We use our trend lines to outline the structures of the market that we have. So if for example, I mean, say I was to outline the outer structure or whatever structure that I'm seeing here, I was gonna use my trend lines to outline this part here as my lowest part of the structure, and then so pardon, and then here this one I'm gonna use it to outline my highs of the structure. So here this is my outer structure here, or my bigger picture. If I was using a daily time frame, this was gonna be what my outer structure. Why am I saying so? Because of, as you can see, the market managed to give us what? Managed to give us the parameters here, whereby it came twice to respect whatever structure it was giving us. So this is it was our outer structure. Hence, you can see the first and the second touch man gives you the verification, or it verifies to you that the structure is now valid. The second touch verifies the structure. And then if also here you have the trend lines here, you can see that we are now having again what? The outer parameters, but on the lows. So here we use our trend lines to outline our outer structure. And then as we move maybe to smaller time frames, we also use our trend lines to do what? To outline the inner structure. Let's say if this was this part here was our, if this part here was our sorry, if this part here, I can say this part here was a structure that we can say we can cater for. We were going to say this is our inner structure. We also use what? Trend lines to outline the inner structures that we have inside what? Our outer structure. So from here, we continue using what? Trend lines till we go to maybe, or we at the lowest time frame to take our trades, maybe your 15 minutes or your 1 hour to take your entries. You're going to continue to use what? Your trend lines only. So remember, on a bigger picture, you only use horizontal rays and trend lines on your bigger picture, let's say on a daily chart. And then maybe continue going on, you're going to use what? Your horizontal box or your horizontal square. So on this one, guys, you only use it maybe to cater for a sensitive level. You see, like maybe a level whereby the market came maybe for the first time, second time, or like respected the level for a couple of times. You see, so here we only use our horizontal box, we don't use what? Our horizontal rays, so that you cannot be confused. You can use your horizontal rays here, but for not being confused, for you to know which tool or this tool is each job is on this thing, you have to use maybe different tools, because 3D view has different tools. So then we use again, like I said, we use what? A horizontal box, maybe to outline your sensitive zones, your key zones, or your level whereby you may be putting something as a reversal pattern. I'll show you. I'll switch the color. Maybe you have highlighted something as a reversal pattern, which is there. This one is this one will be our double bottom. So it is also part of the patterns that I'll be also showing you guys. So from here, you can use your horizontal box maybe to outline this level here, so that you can say, maybe you can predict if ever the price comes in a corrective manner to respect the previous low, it will be giving you what? A double bottom. So you can also use your horizontal box to use what? To outline maybe the levels of of you for you to confirm what a reversal pattern or whatever pattern that you're going to be getting. If you maybe it might be a head and shoulder setup, you can use also your horizontal box to outline, maybe to cater for the neckline, or maybe to cater for the if ever it was a head and shoulder setup, to cater also for the you can also use your horizontal box to cater for the shoulders here, so that you can confirm that this is a head and shoulder setup. Why am I using this horizontal box? Because you can also use your what you call your horizontal raise to cater for these things. But I prefer to use this one to keep your chart clean and maybe easier for you to understand. Hence, I'm using the horizontal boxes to outline maybe my zones and levels whereby I'm anticipating maybe the pattern, the market will be giving me a reversal pattern, or to cater for the shoulders of the head and shoulder. Then we also have the bar pattern. The bar pattern is maybe a tool that you use to backtest. Maybe you're backtesting something, and when backtesting something, I'm going to be showing you how to backtest. Maybe you're backtesting something like this. You use what your buzz pattern. Maybe you wanna predict something like this. You can use your buzz pattern and then backtest on it and then check. Okay, if ever the market managed to give you an impulse, maybe you wanna check if the market gives an impulse. It has to give you a correction, then give you an impulse, and then you say, okay, from this price that I'm seeing here, I can also anticipate something like this, but in an opposite direction. So this is a buzz pattern. You use it to anticipate the movement of the price. Maybe okay, let me put it in a good way so that you can see. Let me flip it. Let me flip this one so that you can all see. Just want you to see everything. So this is how I anticipate maybe on this price that I'm seeing here. This is how I'll anticipate. Or because of now price is giving me an impulse, I just want to see price maybe coming here to respect this previous high and give me whatever pattern that you want to give me or whatever. This is the tool that you use to forecast or backtest. Maybe if you want to backtest the previous movement, you use this thing to copy the price and then work on it, and then work on it. Like this one, you can work on this one and say this is an impulse correction, and then you see like, oh, because of it had something like not a clear direction on this one, it meant you price was giving you a correction. So from a correction, you price has to give you an impulse. Let's say you were backtesting an impulse and correction. We're gonna copy the price here, put it outside, and then work on it. This is how we use the buzz pattern. And then we have this is an arrow to indicate whatever direction you want to indicate, whether up or down. I don't have to explain this one further. And this one is also an anticipation tool. Maybe you wanna cater for how price is going to move, or how you need to see price move before you take your entries, because the market repeats itself. The market repeats itself for a long time. So you can maybe anticipate something like this, and then the market comes and gives you the same thing. The market comes and gives you the same thing, and you can set your trading plan according to what you see from your anticipation or your forecast. Then you set your trading plan and say, okay, if I think the price is going to give me something like this, and then give me a continuation pattern, and then I'm gonna take the trades here and here and here, and then so on and so on. Those ones I'm gonna be explaining them as we continue. So from this one here, we also have this one. This is let me see, ellipse. So ellipse, I just only use it maybe to outline to you, like maybe to show you like maybe the mass psychology area, the area of mass psychology, whereby maybe you see like price. What I mean by mass psychology is this. Sometimes price creates sometimes price creates a high, coming respect the low, and then acts as if it has broken above the previous high, and then comes back again to previous structure, retest the previous high it is created before, and then continue pushing to the downside. So this is a market psychology whereby it is stripping. My psychology is whereby the market it is stripping traders, more especially us retail traders at the wrong side of the market. You see, because you're gonna be thinking like the market is broken above. So if the market is broken above, it has to retest and then continue pushing to the upper side. But with the strategy that we're using, you're going to be able to spot if the market has broken above or it is giving you a mass psychology and then it will reverse again to your previous structures and then move to the downside. You're going to be able to spot those false breakouts and not original breakouts. You're going to be able to spot the real breakout. So this is how we use this tool, the elite. And then I don't use this one. And this is the brush, so that maybe you can cater also again maybe the levels that you see. Oh, maybe this is a key level. You see, then yeah, these are the tools that we use. So from all those tools that I showed you guys, from all the tools that I showed you, we use them like from our daily chart to our either 1 hour chart or either 15 minutes time frame. If ever maybe you're trading events, you're going to be getting deeper to the charts until you reach your 15 minutes time frame whereby you're going to be able to scalp the market. Because when you're trading events, you have to scalp the market. You don't have to be looking for swing positions when you're trading events. Events are just that volatility, and then the market goes back to its normal way. So if ever you're gonna be trading events such as New York Open, London Open, whatever, you have to work your way until to the 15 minutes time frame. But if ever you're gonna be trading currencies, such as the Euro USD and so on, your gold and everything, you can take your trade on your 1 hour chart or on your 4 hour chart. It will depend on how you see the market. So now guys, I just want to ask if ever guys you guys have a question on whatever I just said to you, or I can proceed to show you the example on how we use our tools, how we use them combined, like how do we work with our analysis, how do we work with our tools to predict maybe a certain direction or a certain thing. So I'm gonna be unmuting you guys so that I can hear you asking me questions. Where I didn't be clear, you can ask me so that I can repeat. So I'm gonna be taking your questions like one by one, not all of you guys. I'm gonna be taking Trinity first. So Trinity, you can ask my name. Maybe there's something I have to explain to you whereby you didn't maybe hear me well, maybe I didn't explain clearly. Evidence.
I say I don't have a problem.
Question. Okay. Lucas, I don't know if you have a question. Still, you can also unmute your mic.
I got no.
No, you're good, guys. We get the same page, all of us. We're the same page. If ever maybe I was to say to you guys, okay, use the tools and analyze for me, you can use them like exactly. I just want to know like we all in the same page, or I have to like add more things, or we all in the same page. We all in the same page. Hey.
I got man. So what are so one good
Yeah,
so I get say haeba ni king o tluwa ka yona like ha di-session tse di ya so nna ne ke batla ho tseba hantle ka di-long position le di-short position wa bo because like bo wa tseba hore o nka entry jwang o beha stop loss leveling e feng wa bo Hotman.
Like I said, guys, like I said to you guys, because of this is a program, you know, I just want to do it in a correct way, so that nobody can feel like he's left out or something when I proceed. Obviously, I'll get to the point of how do you take your entry on this one. I just wanted to show you like how I just want to show you an example here how I use the tool, because now we only have 10 minutes remaining. So on this 10 minutes, I just want to show you an example on how we use the tool, how we take the trade, and we're going to be explaining further. I'm gonna be doing the explaining further really from day 2 according to the schedule. You also the schedule, how the schedule is. So I'm gonna be explaining further according to the schedule. So when a day when I'm able to host maybe a meeting, I'll let you know guys in the group. If I'm seeing something that you guys should be maybe focusing on, and if you have question, you might have questions on it, I'll make sure that I forward it in the group, and then ask you can maybe ask me questions, and then when we have time, I work on it. We set a meeting and then we work. That's all. So yeah, that's it. So let me proceed on this 8 minutes that we have. So guys, as I explained to you the tools that we're going to be using, and I hope you all clear. Lucas, the sharper screenshot. Oh,
Ke sharpile no.
sharp. So here is it. Guys, from all the tools that I explained to you, I just want to show you a quick thing. I'll ask you guys to please mute your mics. Please mute your mics. And then if you have a question, you ask me, or I'll open up and maybe let you ask. So let's say I'm not using a monthly chart. Let's say this is my daily chart. So from this daily chart, this might be a picture. Let me not mention chart. This might be a page. For my bigger picture, like I said, we use our horizontal grids to outline the highs and the lows of the starch. So as you can guys all see, or I don't know if I have to like maybe zoom it well. Let me zoom it well so that we can all see. That it can be clear. So as we can all see, like I can use the horizontal box to outline this one, but it won't be clear where I won't be like maybe happy with it. So I just want to use my tools as I'm used to them. I'm going to be using the horizontal ray to outline the high. This is the high of the starch. And then I come again and outline what the low that is visible to me. This one is visible to me on the bigger time frame. So I outline this low. And then from here, I'm done. From the bigger picture, I'm done. I have nothing to work on or to work with. I have nothing to work with. Pardon me on this one. I have nothing to work with here. So for my bigger picture, as you can see here, I'm done. I have outlined my high and the low of the structure. So from here, I then move like to my smaller time frame from a bigger picture. On this one, guys, I can see like, okay, now like since the market has given us the low, has given us the low here, and it went up, came again to respect the low, and when it went up, came again to give us what? A double bottom. So this is a double bottom. So from here again, I can see, okay, I'm having another low that I missed because of it wasn't clearer on my on my bigger pitch. So I also cater for it. This is whereby I use again what my horizontal ray. And then I move forward. When I move forward, I'm gonna be working on what? On my structures. I'm gonna be working on my structures. So my first structure that I'm gonna be working on is my outer structure. So as I have catered previously, I think you also like, as I catered previously, you saw like we have the outer structure here, which is having the first touch and the second touch, and then here this is the first touch, this is the second touch. So This to me, it verifies to me that I can now use my trend lines to connect them to outline what my outer structures. But then before we proceed, we want to see if price can go to respect what our previous high. And then from this level here, this is where we're going to be starting to look what for the patterns that we can cater for. So because of now the market is still on these zones here, we want to see the market coming pushing to this levels here before we take what our entries or before we analyze. We want to see if the market respects what we have catered for. So we wait and check the movement of the market. So we can see now price is starting to push impulsively to the upper side. Then it came to what to our previous high, giving us what a double top. So when it comes to what previous high giving us a double top, it then rejects. So this is the first confirmation. The candle haven't closed, but this is a first confirmation that the market has failed to do what to break above or to break the previous high. We then let the market to give us what another confirmation. Without another confirmation, we're not going to enter the market. So from here, guys, as you can see, as you can all see, the market has given us what a double top here. So from now here, I can say I can start to use my trend lines to outline my outer structure. I can start to use my trend lines to outline what my outer structure. So this is the structure that I'm having. This is the structure I'm now having. So as you can all see from the structure that I'm having here, this is an expanding structure. I'll explain what the expanding structure is. On this one here, I just want to show you how I use the tools that I just told you about to take my trades. This is a typical example. I'll do more explanation explaining on our next meeting. I'll do the more fair explanation on our next meeting. So make sure all the time, guys, when you connect your structures or your trend lines, make sure you connect them right to the weeks so that you can give valid levels. So on other ones like this one here, it doesn't have to maybe come and respect. You will see sometimes the market doesn't come and respect your trend line exactly, but then it will give you a confirmation. It will give you a confirmation. Either it's going to be showing you like it is at a level whereby the market managed to come previously and respect the zone. You can see here, hence the market managed to go to the downside. So now, as I move, because I'm only having a few minutes, as I move forward, guys, let me wait to load. As I move forward, guys, I'm gonna be quick now. I'm not gonna be explaining much. And from here, I move to my smaller time frame. From my smaller time frame, now I can see some more data to work on. I can see some more data to work on, and then as I can see, I just want my structures to be clean. As you can see, guys, now I'm gonna be adjusting for this. This is how it is. Like when you go to your smaller time frames, the structures are starting to be clearer now. Then from here, we are having what in a structure is an uptrend. We're having structure is an uptrend. So from the next video that I'm gonna be doing now, guys, I'll forward you another link again, guys. You're gonna join again. I'm gonna be continuing from where I left. This is where I left. This is where I left. I'm gonna be explaining again. So wait for another link in the group so that we can continue. Just want to explain this part to you guys so that you can all understand. So let us wait for another, because we are only having less than a minute here on this meeting. So let me end this one and then we're going to start another one.